Okay, to our final, and thank you, Dad, to our final presentation of the afternoon. It's Incanthera. It's focused on innovative technologies and dermatology and oncology. It has a commercial deal to launch its Skin Plus Cell as a luxury skincare brand. This deal has been described as transformational. It's also been nominated for Aquis Company of the Year 2024. I'm delighted to be joined by the chairman, Tim McCarthy. Tim, over to you.
Thank you very much, Sarah. Okay, thank you. Here we go. So what this, the very first slide says is that we have a game-changing launch with our unique Skin and Cell product range, luxury skincare range, with the world's largest health and beauty retailer. And that's a pretty strong statement. And I'll go on to explain that in the following slides. So next couple of slides, please. And again. But first, let me just bring you an introduction to the company itself and where we emanated from. So Incanthera was a spin-out of the Institute of Cancer Therapeutics, which is a dedicated unit on the University of Bradford campus that is dedicated to world-breaking, world-leading cancer therapeutics, hosts about 100 staff from professors down through PhDs, very highly qualified, doing some fantastic work in the area of cancer research. And they got to the point where they had 2 or 3 different types of technology, which they had to spin out into a company that was able to then take it through the development phase. And that's how Incanthera started in 2010. And that's obviously where the name came from, Incanthera, from the Institute of Cancer Therapeutics. We developed as what I would call a typical biotech company, researching into pharmaceutical development, specifically in cancer in our case, for the next 10 years. And then in February, last day of February 2020, we listed on the Aquis Stock Exchange. Brilliant timing, as that was the day before the whole country locked down with a COVID pandemic. But never mind, we've survived that, as everybody else has. But recently, we have been developing the cancer side of the business, very much focused more into the dermatological applications and how we can use our patented technology to make a real difference in that area. And that was demonstrated in December 2023 when we announced this commercial deal with, as I said previously, the world's largest health and beauty retailer. And specifically, the deal was signed with their European subsidiary called Marionnaud, but this is part of the worldwide A.S. Watson Group, which is based out of Hong Kong, part of the C.K. Hutchison Group, and that has around 16,000 stores across Europe, China, Asia, operating in 28 different countries. So a massive group. And as Sarah introduced in introduction to me, this very much is transformational for the company. Next slide, please. So we have, because of the deal we've done with Marionnaud and Watsons, we have changed the immediate focus of the company from what I would call the typical pharmaceutical development into what is now more a revenue generating, profitable company. And this is very much how we have developed this product range, Skin and Cell, as we call it, which is a luxury skincare range, taking advantage of our patented technology to be able to deliver certain active ingredients and certain products through the skin. Now, if you look at your skin, as you often do every day, you will appreciate that it's a very robust organ of your body. And I do call it an organ because it is very much like your heart and your lungs. And it's very robust in the fact that it doesn't leak when you go out in the rain. If you happen to cut it, it repairs itself. And it's been a challenge in the industry, in the pharmaceutical industry especially, to be able to deliver drugs or other active ingredients through the skin. And what we've been able to do in Incanthera is to bring a well-known active, which has been proven through clinical studies to be able to repair and restore the skin when it's damaged through UV rays, through environmental actions, and deliver it through the skin without damaging the skin and getting under the skin to the cells, the DNA just in the cells underneath your skin, which require repair and to restore them. And this isn't anything that anybody's been able to do before. And this is what really attracted Marionnaud to enter into commercial deal with us, because we first approached them about the pharmaceutical side of our business, because they do have a pharma side as well as their health and beauty side. And they asked us specifically if we would work with them to develop this particular product range, because what they're finding these days is that consumers are much more aware of what they're putting on their skin. They want to put something which not only gives them a nice feeling, it smells nice, and they get a nice feeling like they would with any other skincare range, but they want to know what they're putting on their skin is doing them some good. And we could demonstrate to Marionnaud and Watsons in turn that the technology which we have was able to do that. And from our perspective, it's a fantastic opportunity. The market here is growing every year. There's some projections that it's going to reach 180 billion this year. So a definite recognized demand. And so we spent most of 2023 going backwards and forwards with Marionnaud, developing this technology precisely to their requirements so that they could introduce it into their market, which they're planning to do later this year. Next slide, please. So just a little bit of the science behind it. So what we're doing, in fact, is to deliver a bioactive vitamin B3. It's also known as niacinamide. And this has been proven in clinical studies that were conducted in Australia, not by us, I hasten to add, a couple of years ago, when it was given orally to patients, that it absolutely demonstrated that it repaired the DNA of the cells just underneath the skin, which had been damaged by UV rays, by environmental attack. And a very, very successful study. Unfortunately, the product itself was never introduced into the market, the pharmaceutical market or any other, because it was challenging from a practical perspective to ask patients to be able to take this product every single day in huge quantities. Because as you imagine, if you take something as a pill or a capsule, you are having to ask it to get all the way through your body systems, and the body naturally tries to get rid of these types of drugs as they come into your body. So you have to overload the body systems in order to get it, what I would call inside out, so that it works its way out into the dermal layer just underneath the skin. So by reversing that whole process and being able to apply this on the skin directly, and it's able to a patient, or not in this case a patient, but a customer who's looking for both the luxury skincare, but also the protective quality and repairing quality, which niacinamide has been proven to be able to deliver, then we are giving it only, or the consumer is only taking it as and when they need it, when they're exposed to the sun's rays or out in the environmental environment. And by that means, we are the leading player in this, and in fact, this is what attracted Marionnaud to this, because they're looking for innovative products which they can put on their shelves to bring footfall back into their stores. And this is very much what we have been able to deliver to them through working with them hand in hand over the year of 23. Next slide, please. So what that led to was an announcement in December 2003 that we entered into this deal with Marionnaud and A.S. Watson, and we had agreed that we would manufacture the first production order for them of 25,000 units for an initial launch in their stores in Switzerland and Austria later this year. And the 2 or 3 different criteria which they asked for, one was that it was a very well packaged, well delivered product. So we developed this with them and with a manufacturing subcontract manufacturer in Switzerland called Frika. And this is what we have ended up with, in the sense that we have contracted Freaka to manufacture everything, so we don't need to invest in our own manufacturing facilities. So very low cost of goods for us. And what we then went on to do, if we go on to the next slide. So this deal is developing through the year as we move. So in discussion with Marionnaud through the early part of this year, they said to us they were very keen to increase the initial launch order. They're very excited about the test marketing which they have done with their consumers and the introduction of this range. And so we announced in March 24 that we had doubled the first order from 25,000 units to 50,000 units. We had brought on an extra part of the product range, so it increased from 4 to 5, and expectations that further orders would be of an order of magnitude greater, and we've indicated here second order to be about 250,000 units. And what we also did at the time was to employ Stanford Capital, our broker, to produce a research note, and within that, and I'll show some of the extracts of that in a moment on a future slide, that the first order of 50,000 units was about to generate revenue of £2 million, and by their own projections, produce a revenue for the first year of £10 million, which would be to the end of our first financial year of March 25. And this was received with obviously a lot of fanfare, the fact that the order was increasing, the fact that Marionnaud were demonstrating their faith in this product. So we carried on, obviously, with manufacturing and ready for the launch. And then if we go to the next slide, just this week, 2 days ago, in fact, we have announced that due to a couple of things. One, a continuing interest from Marionnaud to up the orders and do a much bigger launch than we'd originally anticipated. And following the update in March, we got some unprecedented approaches from some very well-regarded small cap fund managers in the city to see how they can get involved in the company. And so we put together a deal which we announced on Monday, which involved a new fundraising, and that certainly has brought a number of new institutional fund managers into the stock. And we also announced that we had doubled the initial order again from 50,000 to 100,000 units, which again, that was in conjunction with Marionnaud saying that the more that you can deliver, the more that we can sell. And they're getting very excited about this and the initial test marketing they've done with their consumers. So we have revised the revenue forecast yet again from 2 million units, £2 million, sorry, to £4 million from the first production order. And we certainly expect to exceed the guidance that we gave before of revenues of 10 million for this full year. I'm not going to put a number on it, but certainly we certainly expect to exceed those 10 million revenues. And also, the original idea was that we would launch in Europe in around the middle of this year, and we would launch out into the wider market in Asia sometime around the first quarter of 2025. But recent discussions with the group out of Asia and based in Hong Kong from the group CEO, they are very keen to get this product on their shelves in Asia as soon as possible. So we're in discussions at the moment with the group as to how we can accelerate that launch in Asia. So watch this with this space. And with all of this, we announced the institutional investor-led subscription and sale shares totaling just over £4 million. Now, it's important to say that this money coming into the company is all going into inventory, and this is what's driving the revenues. And when we talked about this being a transformational deal for the company, it really is a transformation on the typical, what I would call a typical non-revenue generating loss-making company, relying on the capital markets to fund the development of pharmaceutical development. And we're turning this on a sixpence to a company which is immediate revenues, immediate profitability, and the prospect of immediate dividends for shareholders. And every penny that we have just raised on Monday will be going into inventory, and more inventory that we can produce, then the more that we can supply to the Watsons Group generally, and the more that they can sell. And they've made it pretty clear to us that the more that we can deliver, the more they can sell. So the idea is that this recent equity increase will allow us to drive that profitability, drive that revenue. And then in the second half of this year, once we start to produce those revenues, then the revenues will go straight back into inventory. We fully intend to kick in outside trade finance, which is non-dilutive. And we're talking about some pretty chunky trade finance facilities, maybe 5 million from one, 10 million from another. So you can see how all this is going to get an accelerating effect in terms of driving the company forward and its financial profile. So next slide.
Yeah, you're going to have to wrap up, Tim, please.
Okay, no problem. So this is from the Stanford research note, projecting revenues of around 10 million this year, driving it's up into the 30s and 40 millions on their conservative estimate. But once we roll out to China, you can see these revenues are going to get extremely chunky, with going up into the hundreds of millions per year, and with 30% EBITDA on the bottom line. Next slide, please. I have to say, we've had fantastic experience on Aquis, and I don't agree necessarily with the criticism that Aquis always gets, that it's a lowly traded market. I think it is all about the company profile. It's about the IR and the PR that the company does. And the last bullet point on here just demonstrates that since we announced the deal in December, we've had 53 million shares traded in the last 6 months. Next slide. And also the shareholder analysis, our experience here is you can certainly attract good institutional investors into the stock. And in fact, that pie chart there will grow that piece of the pie from the institution from the recent fundraising in the next month. But it's a nice balance we've got between institutional, retail, and a few other the founder shareholders. And the next slide, which I believe should be the last. So in summary, we've got a company which we've turned just in the last 6 months from a non-revenue generating, loss-making company into generating fantastic revenues from this deal. We still have the opportunity to expand the product range into other markets not connected with Watsons in North and South America, Australia, etc. And this calendar year ending March 25, we will be producing revenues in excess of 10 million. We're definitely profitable and cash generative. And we have made a statement that we will be paying dividends straight away to shareholders. And if you look at some of the numbers that were in that earlier slide on the revenues and EBITDA, we're currently valued at about 20 million on Aquis. So I don't expect that valuation to stay where it is. I expect it to be many multiple times of that within the next 6 to 12 months. So I'll call it at that, Sarah, and let you ask any questions that have come through.
Many, many thanks. And I think we should tell our audience that Stanford research note is widely available. I found it quite easily on the internet. Chris Holmes asks, are you currently actively pursuing commercial deals in the US, Australia, and Africa?
Yeah, thank you, Chris. Firstly, to supplement that, Sarah, the research note is also available on our website if anybody wants to look at it. So, Chris, we have got contacts in many other territories, North America, South America including, and Australia. And we are very keen, obviously, to expand into those areas. But we are very careful not to run before we can walk. And so we are going to concentrate for the next 3 to 6 months on making sure we get the launch right in Europe and in Asia with Marionnaud and AS Watsons. And I think at the right time, we will pursue those other deals. There's more than enough to go at just with the deal that I've just described to you. But don't fear, our ambitions are as big as yours. And I know you're a shareholder and a follower of the company, so thank you for that. But we will certainly be looking at those new markets when we can.
So validation and verification, another question. Have you had to get clinical validation for the product in any end market? And is there a peer-reviewed paper showing the efficacy of the product?
I'll do that backwards. There certainly are peer-reviewed papers, clinical studies I was explaining on the product, the active niacinamide. But just to clarify, we are delivering it in a completely different way with our patented technology so we can get it through the skin. And that's important. But also to differentiate between a pharmaceutical drug and a cosmetic. A pharmaceutical drug needs to go through a very highly regulated process with clinical studies to back it up before it can get approval to be launched. This is a cosmetic, and we're not veering into the area of pharmaceutical here, and it's a very fine line that you have to draw. But certainly we are able to launch our skin and cell range without any of those clinical studies that we have to do. But the science behind it is definitely proven through other studies which people have done. Definitely.
Okay, we're going to finish with a cheeky question. So you had the unprecedented institutional-led subscription. Can you be bullied by retail investors to do more equity financing? That's obviously the retail investors want to have a bigger involvement as well.
Okay, I'm a great believer in having a nice balance in a shareholder base between institutions and retail. We have a good retail following, and as I say, we weren't going out looking for extra cash this time. This was very much led by the institutions who wanted to get into the stock. So all I can say to any retail investors that are out there that aren't currently a shareholder in the company is to go out in the market and buy some, because certainly the share price and the valuation is not going to stay where it is at the moment. We're not intending to do another equity funding. So if anybody wants to get in the stock who aren't already, then certainly get onto your broker and buy some shares, I would suggest.
Many thanks, Tim. I know it's been a really amazing 6 weeks for the company. Thank you very much. Thank you very much indeed for finding the time.